All right. Hey, everybody. TG here. Let's make sure we are good to go. We should be in a few rooms today. So we got the Moxie room, we've got the Essential room, and then we're out on the social medias, YouTube, Facebook, X, all those kind of things. So as long as our technology is working, looks like we're good to go. Thank you, guys. Okay. And let's see. So today is going to be a macro market review. And I think we all pretty much understand what's happening with the market. It has been just on meltdown mode. I have been looking for any kind of area, certain areas that are going to be bouncing. We had a really nice bounce this morning, and it looked at it perfectly got rejected by the 15-minute 50 right there. I was actually thinking that today was going to be a little bit stronger than it was, and I wanted to see price actually come back up to its range right there. But instead of doing that, it rolled over. You can now see that we're kind of breaking this level. And after that, I don't know. We're going to have to see where this is. On a, since this is a macro type thing, I'm going to be zooming out a little bit. I'm going to be looking at some VIX. I'm going to be showing you guys breadth. I'm going to be showing you gold, GDX, something like that. We've also got some internal numbers. And then we've had some talk in the Moxie room about foreign markets. So we're going to be discussing some of those as well and kind of showing you guys what's been happening, because amazingly, that the foreign markets are actually doing really well compared to America, compared to the US market. So we'll dive into that. As we look into this right now, the S&P is down on the daily 200. That's a common place for price to find some support. We don't know if it's going to hold. It's been struggling so far. And it's also kind of outside of this lower channel, that 30 ATR that I use. And so these are common areas that I look for to say, hey, this market's getting pretty oversold. We should bounce. And we've had a couple bounces recently based on kind of less bad tariff news. I think that's kind of the best way to put it, is less bad tariff news. But there's no follow through. There's no follow through. And it looks like the institutions, the big players out there, are the ones really, really driving this market down. And so far, either there's no panic yet, because a lot of times when you finally get capitulation and panic, that's when the market turns around. There isn't any of that. And maybe since the institutions are in control here, they are just driving the market down, and they have a target and they don't really care yet. So there may not be capitulation yet. So the other thing is that if this is kind of, if this is going to be bad, if this is something rough, and if the bottom does start falling out, just remember that a down market is different than an up market. Okay. You kind of think about human psychology, what's going on. People are losing money. They're breaking their stops. Nobody's willing to buy, that kind of stuff. And so when prices go down, when markets go down, they can keep going down. They could turn into a crash if something like that happens, because you just think, number one, people not buying. Number two, people are getting stopped out. Number three, people are hitting the eject button. Okay. When people start losing money, they just say, get me the heck out. And that can cause kind of a free fall, as opposed to when the market's going up, people are going to, take their time. They're going to look at this. They're going to make sure everything tests. They're going to look at some supports. They're going to decide about adding money. They're going to add here. They're going to add there. It takes time and more effort to make a market go up. Then when it goes down, people are just like, get me the heck out of here. So just remember, it can always get worse. I have no idea where we're going to go with all that kind of stuff. It can always get worse. And so far, the bounces I've not held. I'm looking for a short squeeze, but we just have not gotten any kind of follow through. And so that's kind of the overview of just how to be careful, make sure you're protecting yourself. Of course, there are always going to be areas that are going up during a down market. And so those are some of the things that we can talk about. Okay. But yeah, we've been breaking some trend lines. We have broken the weekly 21 in a big way a few days ago. We're right back to the monthly 10. I can't really say too much about that yet. If we look at the IWM, so the small caps, this thing definitely got hammered. When the market just got buyers shut off, this thing broke down. Is there support someplace? Sure. But I don't know where that is yet. We're kind of in that area where, that we are back to a big level. I mean, here we are at 205, which you can see there's a huge consolidation here and another one here. So I'd like to think that something like this is, going to be finding some support at some point, but we need to actually see things turn around. Maybe even we need a narrative shift, but we haven't gotten that yet. And as I said earlier, we are at areas where I would imagine that the market should bounce, but it just hasn't happened yet. So, make sure you keep things nimble as far as this kind of all goes with it too. And then if the Nasdaq's going to be basically the same as the S&P, the Dow financials, I got to show you that. The Dow actually had a really nice run up over the last few weeks, January basically. And so, hey, market was looking pretty good, but it did get into a double top. And you can see here that the Moxie indicator on the hourly chart proved and demonstrated that this thing was not going to go up at that point. I was expecting a pullback, but this is turning into more than just a pullback. And on the daily chart, this actually is now same thing with the S&P. These are now official inverse trampoline moves on the daily chart, which means price should not be over the 50 when the Moxie indicator is below zero. And those have now confirmed to the downside. So we either have more downside, we have more chop, we could be at a range. It's kind of hard to say what's going to be happening next, but yeah, things are not happy out there. The semiconductors, well, we know NVIDIA and DeepSeek, that kind of all broke down everything. Remember, ever since the DeepSeek news came out, I've been saying that I don't think NVIDIA is bullish. It did have a pretty good bounce. I'll show you that. But I've been saying, look, I think it just was an oversold bounce, and that proved to be accurate. But we can see that the semiconductors have been having problems for quite some time, and now they're definitely breaking down in a big way. You can see that there. And here on the monthly, weekly, same thing. It was looking kind of, I think it was right here, that ticker. Things were looking promising. It was holding a level, looked like it wanted to move up. That was a kind of a fake out move to the long side, and then got hammered on the DeepSeek news, had a little bit of a bounce, but now we're rolling over. And so the semiconductors sector is just really not looking good. And then if we do take a look at NVIDIA, same kind of deal. I was willing to entertain that NVIDIA was about ready to go higher right there. And it's kind of funny that just as things start to move up is when you get smacked with some news like that DeepSeek thing. And that took us down to potential support. It did bounce, but I figured that bounce was going to get sold into. And now you can see that we are getting some weekly sell signals on NVIDIA. We are definitely under and breaking through the monthly 10. And let's see so if you look here, this is really just a bounce. Yeah, right there. That was just a bounce. And you can notice, look at NVIDIA for months, actually, at this point, basically since December, the Moxie indicator has been below zero. And so none of this was telling us that they really wanted to go higher. Inverse trampoline move, inverse trampoline move, inverse trampoline move. So yeah, nothing really good happening out there for NVIDIA and the semiconductors. I think for the most part, well, let me show you actually XLF. That's going to be the last kind of area that I'm going to show you. We had some people in the Moxie room talking about this and saying, hey, the financials are looking pretty good. Look at them making new all-time highs. And it's like, yes, but if we remember, a few weeks ago, the S&P made a new all-time high, and then that proved to be the end. That's when it rolled over. And I said, we need to be careful about this because at the time that XLF was making that new high, notice that the Moxie indicator was still below zero. Of course, it could change. Of course, it could trigger and fire, but we wanted to see some follow through. And when we had price up here and the 50 down here, I tend to say, well, let's see what happens when price and the 50 meet. And sure enough, I think it was the next day or two, you could see that this just collapsed. So I was happy that we looked at that and said, let's not trust it yet. Let's look for confirmation. And basically the confirmation was that the price ended up going straight down. So that was an inverse trampoline move also on the hourly chart. And we could just see that perhaps what's happening out there is a lot of this stuff got really overbought. Of course, the tariff news and all that stuff is really, really hindering the market. But if we kind of look around, the market has actually almost been overbought. And this tariff news seems to just be kind of part of it. So it could be just greasing the wheels, but also from a technical standpoint, if you look, I mean, look how overbought that was. And you can see in the past that price just does not like to go that far outside of the third ATR. And we've been seeing that across the board. Finally, things like the NASDAQ finally said, we're done. We're done to the upside, and now we're pulling back. So The real question is this turning into something worse, or is this just going to be a 10% correction on the SPX, that kind of stuff? So, and that's what we're looking at. Now, if we kind of branch off and we look at GD, well, let me actually do UVIX and the VIX. We'll stay on topic. Basically, we'll talk about the overall market, then I'll branch out to some other sectors. What I tend to find is that when the UVIX, and again, this isn't a typical down move or kind of typical markets, this might be morphing into something a little bit more atypical. Usually when we get a big drop in the market, I tend to see the UVX go up about 50 to 60%. And then that kind of helps mark the low of the market. And we can see that we've gone up to about 50 to 60% right there on the UVX. So I've been looking for a turnaround in the market, but it just isn't there yet. And this keeps climbing. So that's kind of something in the back of my mind. I'd like to see the market eventually bounce, but man, they are really making us work for it on the long side as far as anything getting going to the upside. So there's that. And if we look at the actual VIX, it's kind of telling us the same story. We are at an area where typically this marks a low in the market, 25, kind of up in that range. A lot of people talk about over 20, but here we are at 25. Of course, things can get crazier. Things can go higher on the VIX, but yeah, you'd usually look at this as being kind of a top area for the VIX and a bottom area for the market, but that's not happening yet. So be aware of these things, but don't necessarily take trades on them because they could keep going. Okay, just remember, it could keep going. Yeah, it's been hard to swing trade out there for all of this stuff. Then let's take a look at breadth because I want to show you guys that. And for a while, it wasn't looking too bad. But by this point, yeah, things are looking pretty rough. And so let me get my cursor here. It was funny enough, we totally nailed the top here and expected a pullback because 20-day breadth went all the way up to 80%. And you can see usually it doesn't like to go that much further. So we nailed that. Then I said, okay, well, let's expect a pullback. And we got a little bit of a pullback. And then I was like, expecting a turnaround, especially since breadth was at about 50%. I was like, great. We came off the lows. We came up 50%. We're resting, and I'd like to see it go higher. And that simply hasn't happened. And that is part of the thing that we need to look through here and just be aware that that plan did not happen. And I was trying to look for bounces, whatever. And you can continue to see that even the 20-day, so the number of stocks over their 20-day SMAs continues to break down and continues to go lower. There have been a couple little points where maybe if things were going to turn around, we could see it, but they just keep getting sold into and they don't really work. And now you can see that all the bullishness that we had is starting to really seep into the market. So if you look at this, the market and individual names that had popped up for so much, what was that, basically in January, they were holding, you could say they were kind of holding their gains into February. That's why this breadth indicator was sideways, because there was still a lot of distance between price and the 50 SMA. But after a while, once things continue to come down, we are now starting to see that tickers are starting to lose their 50-day SMA supports. So they've given up all their gains, and now they're actually below moving averages, and that shows you that there is continued and perpetual weakness that's seeping in here. You could even see that the 200-day is starting to get weak too. Now, of course, at some point, this is going to prove to be a washout. There will be a dip. The market will turn around. Great. But we are not seeing it here. It's not quite yet arrived. Maybe it's tomorrow. Maybe it's a month from now. We have no idea. But until these things turn around, until we can see something, we just need to be aware that, yeah, things continue to stay weak underneath the surface. One other thing I'll show you, as far as that generally goes, this is another reason why I was kind of thinking, okay, maybe we should be expecting a low in the market. John Boyk, he's another publisher out there, and every once in a while he posts something like this about new highs, new lows, and you can see we've definitely been having some big new lows. In fact, he said this was a couple days ago. I think it was March 4th, and he said the last net negative reading that was higher than this was October of 2023. So basically, this seemed like kind of a flush out to me. And I'll show you what October of 2023 looked like. If we go to the SPX, Let me look here, right there. So there is October 2023, right there. And we just on the 4th got a reading about equal to that. So, again, this is why I was kept looking at this, because everything I'm looking at says we should be at an area where the market is going to bounce, but it is just not happening yet. So you can have all these ingredients, but until you actually put the thing in the oven and turn it on and bake it and let the dough rise, it's just a bunch of ingredients that are put together and it's a bunch of dough. So that's kind of one way I'm looking at this, is like I feel we got like a lot of ingredients, but nothing's quite popping off, nothing's quite lit. You got all that kindling for potentially a short squeeze and for a bounce, but nothing has sparked it quite yet. So that's all the stuff that I'm looking at, and hopefully that kind of gives you a big overall view of kind of what we're expecting or seeing out there. Now, let me kind of talk about GLD and gold. Now, in the Moxie room, so Trader B and Emil, you guys have been kind of, Emil, I know you're a huge gold bug and all that kind of stuff, been doing great for you. And Trader B, you kind of put in a little piece of nugget, no pun intended, but made me think about this too. When bear markets show up and when there are problems out there in the stock market, sure, maybe people will buy GLD and gold because, well, it's an asset and it's a flight to safety and stuff like that. But then people think, okay, well, I'm going to buy GDX or I'm going to buy the gold miners. And usually I caution against that, because if the market's really going to crash or things are going to come down, nothing will stick. If people need to raise capital and they're getting stopped out and margin called and they own GDX or gold miners, they will sell them too, because they are also companies and they are also stocks and they're just pieces of paper and people will need to sell them too. So that's usually why I'm hesitant. But then I wonder, we are in kind of a new territory here where if you look at gold has been flat for several years and we are on this massive run. And usually you'd think, okay, well, gold miners should be doing great when gold is going up. And they were. Here's GDX. They were doing well for a while, but then there was this big pullback. And I'm like, I don't trade gold miners too much. I kind of dabbled in the past and not too much. And I'm thinking, is there going to be something here? But then Trader B, you kind of put in my head is like that you said, and this makes a lot of sense. The gold miners are huge. They're huge consumption, and probably one of their biggest costs besides labor is energy, because everything that's involved with mining gold or any kind of mineral is like diesel fuel and electricity and everything that it takes to actually power the mine. Maybe some explosives too, but really for the most part, they are extremely energy heavy as far as what their costs are. And then, so the other thought was, okay, well, why hasn't GDX been moving up? Okay, maybe for its own reasons, because it's just not quite responding. But then I thought, okay, let's kind of look at USO, actually, I guess /CL, and we can see that if we look at oil prices, well, they have been trending down. And not only have they been trending down, they look like they're just about to break lower from this overall level of about $68. And before Trump got in, people were actually thinking, okay, Trump's all about the economy. We're going to have a strong economy. We're going to have growth. And people actually ran the price of oil and energy up, because they were thinking, growing economy needs more consumption, energy, and all that kind of stuff. So that's going to go up in value and price. However, people then started to realize, like, Trump is all about drill, baby, drill. And he is going to be putting energy on the market. And that actually would flood the market and make energy cost less. And that's really what he wants. He wants the cost of energy to go down, because that it will help inflation, it will help business, it will help the economy. Say what you will about the environment and all that kind of stuff, but we're just trying to talk about facts here, that if you put cheaper energy out there, it will lower the cost of everything, because that's a number one input cost. And so then you think, okay, if energy costs are going down, if gold prices are up huge, then maybe there is a triangulation where GDX and gold miners might actually start doing well. And I have a little trick that what I like to do in order to look at sectors to see if they're going to be doing well, if possible here, is I like to look at the leveraged ETFs of those sectors. So I kind of was looking around at GDXU, and this might be just some other factor happening that I don't maybe I'm not aware of why is there so much volume that has been coming into GDXU. Maybe it's a relatively new ticker. They switched it from like Nugget being a 3x to a 2x, and maybe the GXU is now the 3x. Let's see here. Yeah, well, it doesn't say here, but when you look it up, it's the triple leveraged. And so I've kind of been aware of this. I've talked about it over the last year or more, being aware that there's been a lot of volume here, and it looks like it's double bottomed and it's starting to engage with its moving averages and all that kind of stuff. And yes, it took this recent dip, and that kind of put me off it for a while. But now I'm looking at it again. I'm like, what about this triangulation of all this? Cheap energy, high gold prices, stuff like that. So maybe there is something here with the gold miners. And you can see that we actually had a pretty nice pullback into the weekly 21, the weekly 8, the weekly 30, the weekly 50, basically everything. And you can see here we were also into the monthly 10. And then I come over and I'm looking at the daily chart. And of course, this was very messy. Yes, it was in an uptrend, but man, those are some really big ranges to trade. And I have no idea how this thing is going to be trading into the future, but I'm looking at this, and basically the patterns that I like is that we get price over the daily 50, and then we pull back and test the 50, and we have the Moxie indicator above 0. So yeah, I just kind of was looking around like, there might be something to this. And so I'll have to decide if I want to look into GDX and stuff like that. I don't want to go buy it right here. It is at its previous high. I will look for a pullback and then kind of decide about that. But big picture, since this is kind of a macro session, is I'm wondering if that is something to consider as far as GDXU. You can look at Nugget. Some volume has kind of been coming out of Nugget, probably because maybe GDXU is a little bit more of interest. But you can kind of see how it's been in a downtrend. And then you can see here there's a level, and it does look like we are starting to become in an uptrend. So big picture, the gold miners might actually start turning up. So that's what I wanted to mention out there. And then I have just a few more minutes here, and I wanted to show you some foreign things that are working. So money is flowing into European. Let's see, what is a TUR? European ETFs. Now, I've never traded any of these, but it's good to know what's happening out there. And so I started looking around. I was like, yes, indeed, these are looking pretty decent. So I think you guys are good. I'll show you a few. I think you guys are going to have to ultimately decide what you want to do about them. But yeah, like here you can see double bottom, and it's been doing pretty well. That's Turkey. And then let's see. Here's Greece. Not looking too shabby. And in fact, according to the Moxie indicator, here's your double bottom. There's your positive divergence. There's your Moxie price trigger. There's your test of the daily 50, and there's your move. It's all there. So everything that I teach using the Moxie indicator and the Moxie indicator trading system is exactly there to find this entry if you were looking for it. It is there. And like I said, on this move, you can even see here, there's your double bottom, there's your positive divergence, and there's your price trigger to get you in. And then a couple dips, but overall it continues to work. And then let's see, some of the other ones that I'm even familiar with, EWQ, I had these on my list, my large ETF list. They just haven't really been interested. It's a move up and then a down and then up and then down. So, just never has been a thing that I've ever really wanted to trade. But there certainly does seem like there's some energy here that's happening. Again, I can't totally say, hey, I'm definitely trading these and I'm going in on these things. No, I wanted to show you guys what's happening out there and show you that what I'm seeing. And what we can also do is relate this to what's happening with the S&P right now. The S&P feels like it's in a black hole and keeps going down, and it just isn't, and it's going to never turn around. Well, you could probably feel that way here on EWQ on the daily chart when it kept going down. Eventually, look, you get a big bounce. It's kind of what I've been looking for. You come down pretty hard. You do a double bottom. In fact, you do an undercut. You can see here, you do an undercut, and then you turn back around. And look how messy. Look how messy. Look how wild those swings are. That's what I'm prepared for. I've been expecting that since this market has been so heavy and just driven down so much, it's probably not just going to, oh, okay, everything's fine and turn around. There's going to be some jostling around in here. But generally speaking, you can see here's your level. Notice how the Moxie indicator continued to move up. And the final place where it got this really good turn was right here. This was a trampoline move. Price below the 50, Moxie indicator above 0, and then up it went. So the setups are there. The Moxie indicator and the way that I teach is universal. Charts are charts, and as long as you see the setups, they're there. And based on that note, I also wouldn't be buying EWQ right here because it's pretty much at a double top. It's already had a huge move. You're going to have to look for some opportunities. Let's see, EDC, which one's that one? I'm looking at my list here. Emerging markets. Yeah, this is part of why I just haven't really been interested, because look how crazy these things are. I mean, sure, it's been kind of moving up, but then you see this giant move down. This is just stuff that I don't even really want to deal with. But if we're starting to see that maybe there's a sea change going on, then maybe what I can point out, Emil, is that we had price down like this, double bottom there on the Moxie indicator. So there's some divergence. You got a 50, 200, 50 maneuver. And if it can continue to follow through, great. But I would still look for a little bit more engagement here on the hourly chart. And the only other thing I can point out is price down, Moxie indicator flat. There's your divergence. There's your Moxie price trigger. There's your trampoline move. And that was the first move. So there's kind of the first move. I would say look for a second move. And yeah, you zoom out and you're like, it hasn't really been very interesting. Kind of looks like our small caps in America, right? So yeah, hasn't really been super interesting. But then if you look at EWG, Germany, whew, yeah, okay, now that one's been doing great. So pretty amazing. And you can see here it's been holding the weekly 21. It definitely broke out. It's looking great. Do you want to buy it right here? Maybe not. It's a little up there. If this was any other normal stock, would you want to be buying it right there? Probably not. But you can see the setup. There's price down. There's the Moxie indicator flat. There's your double bottom. There's your positive divergence. There's your Moxie price trigger, and it took off. And basically, you can see here's your double bottom. Another double bottom. A little bit late on the daily chart, but you saw it on the hourly. And clearly, right there, it started to break out from that trend line. And yeah, these things are going up and doing great. Let me see if I can show you another one. EZU. Kind of looks like Germany. So I'll just, or the first one I was showing you, France. So yeah, that kind of stuff. And let's see, EWU. And then I got to get going. I got to be in the central room next. And, big picture, it's like, well, this is going to be a pretty tough buy and hold situation if you're looking for some place to rotate money into. You can even see that when the United States was doing great, these things were pulling back pretty hard, but they've now bounced and turned around. Well, what did that bounce and turn around look like? If you were looking at these things for whatever reason, the setup was there. Here's price down. Here's the Moxie indicator flat. And then you did right there. You tested the daily 50 with the Moxie price trigger. So that's your daily setup. But on the hourly, here's price down. There's the Moxie indicator up. There's your Moxie price trigger. There's your trampoline move, and you're on your way. So yeah, if you're looking for it, they're there. I personally wasn't looking for it, but wanted to show you guys that. Okay, so I got to get going. That is the macro review. There's a lot to talk about. Basically, just be patient, step aside, try not to get run over from this market. Eventually, sure, there will be a bounce. I don't know when that's going to be, and we got to make sure that for some reason the bottom doesn't get dropped out first. So thanks again for tuning in. Those of you in the Moxie room, just hang on. I'm going to jump into the central room, and I'll be there in a minute.